In this video, we are going to show you how we use ChatGPT for a 10 times remarkable winning trade, which includes complete trade strategy and breakdown, including ICT trading concepts such as daily bias, liquidity hunts, order blocks, Judas Swing, power of 3, and optimal trade entry with complete trade management. Daily chart, sell side liquidity in the weekly chart, daily bias as bearish. We use ChatGPT to get the Judas Swing. The algorithm and the smart money can start selling into these trapped traders. Daily power of 3 displays down. It made a bearish order block 8:30 New York time. The price 1 minute change of character break off structure. We place a sell stop order. The price immediately. Smart money is building up orders. So this is where we place our second optimal trade entry, targeting the sell side liquidity below London, Asian and previous day low. Profitable 1 to 10 risk to reward trade. Okay, so we are in the micro mini Nasdaq index futures weekly chart. So we are going to look into the weekly buyers or daily buyers. So if you look over here, the price has been pushing up strongly in these areas. However, when the price come to this area, you can see it made a swing high and it retraced a bit and then it started pushing up. However, you can see it's a very choppy price action. It's not strongly going up. It's kind of forming a range, and this week end with a bearish candle. This swing high over here, if you look at this and if the price made a bearish candle, this could be a possible liquidity grab. This liquidity, this area is not showing us a strong willingness of price going up. If that is the case, shows us a bearish sign, and also we can see there's possible sell side liquidity if the weekly candle is going down. So with that, what we see here in the weekly candle is more a bearish biasness more than a bullish biasness. Okay, so now let's jump into the daily chart. Daily chart, what we see is these are the sell side liquidity we saw in the weekly chart, and this is that liquidity sweep we saw in the weekly chart. So as you can see in the daily chart as well, you can see that the price is showing signs of not willing to go up. So you can see the price was pushing up in the daily chart. However, retracement push up, it could not go beyond this swing high. It retraced and it pushed up. However, again, it's not a strong push up. It's a bit choppy, and you can see wicks over here, and then this swing high is lower than this swing high. After that, this daily candle strongly pushed down. So what this possibly shows us is a possible price going down. So when we look at this area also, what we see in the daily chart is also a bearish biasness. So also we can see if the price is possibly coming down, you can see there's a low resistance liquidity run possible because you got swing lows here all the way. Also you can see equal lows here, which has sell side liquidity in the daily chart. So there's a lot of liquidity over here, and possibly the algorithm and the smart money could target the price going down with all these signs. Okay, so now if we go forward, you can see the next day the price has pushed down. So this is Monday of the week. So when we see these signs, what we can do next is, now we can go to the next low level chart and analyze what the price is going to do. Okay, so now let's jump into the 1 hour chart. 1 hour chart, what you can see is price has been in a uptrend in this area. However, you can see the price, every time price push down in this area, the price is pushing down hard. So which is in line with our weekly and daily bearish biasness. So now we look at our daily bias as bearish, and so what we are looking is to see if there's potential bearish trade setups. So we can see a strong push down on Friday, and on Monday also we can see the price is strongly pushing down. So what we will do is we will keep monitoring this price push down. So we usually on Mondays we rarely take trades. We analyze the market on Mondays to see how the week is behaving. So we look into what the price is doing on Mondays. We can see on Tuesday the price kept further going down. So this is also in line with our bearish weekly and daily bias. So we are looking into bearish setups to sell entries. So now if we look on Tuesday, we can see the price is further going down. So the market structure is bearish in 1 hour chart as well. So every time the price is pushing down, it's pushing hard with strong displacement, which is signs of bearishness of the market. So the price is weak, as we can see. So if we keep going on Tuesday, we can see a slight retracement of the price on Tuesday, right? And if we look in this area, the price retrace, however, the time is 1 p.m. New York time. So because of that, in this area, since it's 1 p.m. New York time, we don't take trade setups at that time. We usually take trade setups only at New York time, 8:30 a.m. to 11 a.m. So there was no possible trade on this date for that reason. And if we look next day, we can see on Wednesday, the price is coming up, continuing the retracement. Now, also in this trade, we are using ChatGPT to get further confluences. So basically, we can use ChatGPT to get market insights to see if the market insights are bullish or bearish. So now let's look into ChatGPT. So if you look over here in ChatGPT, we inquired the ChatGPT to get insights for the last week. During the week, we were continuously checking these insights. So this is for the recording, we are showing you this. So then basically ChatGPT gave us a couple of insights. And if you look into that, then we further see that potential weakness in the market, price weakness in the market due to various reasons. So then we asked ChatGPT to refine the answer and ask if the market sentiment is bullish or bearish. So then what we see is, due to various reasons like geopolitical concerns like World War III, Trump, Ukrainian situation and economic data, corporate earnings, with all that, what we see is a bearish market sentiment. So we use ChatGPT to get the macroeconomics insights, and we can see that a bearish sentiment in the market. So we use that as a confluence into our trade, so that the confluence we get from here is that the market sentiment has a bearish biasness. So that's where we use ChatGPT in this trade, but that's only one way of using ChatGPT. We will show you the other ways of using ChatGPT in future trade breakdowns as well. So with that confluences we got from ChatGPT, and what we see in the charts, also as I said in the hourly chart, what we see is a bearish sentiment, the price continuously keeping going down. If you look at the Wednesday price action, what you can see is Tuesday price pushed down, Wednesday retraced, and price pushed down. So there was a possible trade setup over here, sell entry. That's one of the setups over here. And now if you look at Thursday, however, this price push down could not go beyond this swing low. So which means the price is further retracing, and the price is in a range. So if you look onto Thursday, what's happening over here, you can see the price is further retracing up. Okay, so now let's jump into the 15-minute chart. On Thursday, the price has gone above the midnight opening. So we call this as the Judas Swing, where when we are expecting to sell, and if all the signs of the market is supporting bearish entries, however, if the price is going up, that is basically what we call as Judas Swing, where the price is going up to trap traders, so that the algorithm and the smart money can start selling into these trap traders. And also this is the concept of power of 3, daily power of 3, where you can see during Asian session, price has been accumulated, and now we can see there's a possible price manipulation happening. Even some further accumulation could happen in the London, but then you can see the price is further pushing up for manipulation. So this is the daily power of 3 concept and Judas Swing, and this is where traders get trapped, and the algorithm and the smart money can start selling into those trapped traders. If you look over here, we can see a bearish candle over here. So this has formed a swing high. This swing high is lower than this swing high, and we were in a Judas Swing, and we were in the power of 3 manipulation part. So what that tells us is this is possibly a liquidity sweeping a buy side liquidity sitting above the London highs. And we are now checking if there are signs of price willing to go down. Also, if you look at the 1 hour chart, you can see sell side liquidity below this swing low and sell side liquidity below this swing low, and the price is in a range. So also it's showing the bearishness. So which means if the price start pushing down, or if we take a sell entry, we can target this as sell side liquidity to take profits. So now again, I'm in the 15-minute chart. Also, you can see when the price displays down, it made a bearish order block here. And when the price is retracing, you can see the price is respecting that bearish order block over here. So that is also a positive sign for a sell entry. Okay, so now let's jump into the 5-minute chart. You can see there's a minor market structure shift happening here at this swing low and this swing low, or change of character. Okay, so now let's jump into the 1-minute chart. In the 1-minute chart, you can see that market structure shift is clearly visible and the price has displaced strongly down. This is a sign of a sell entry. So we can see the price strongly pushing down. Then we can see the price is retracing. We at least wait till 8:30 AM before we take a trade. So now we can see 8:30 New York time, the price strongly pushing down, displacement in the 1-minute chart, which are all positive signs for a sell entry. So now with this displacement, we can potentially take a optimal trade entry in this location over here, because we can see a 1-minute change of character over here where the price during this push down, let's say retracement, you can see the price went up and pushed down. So change of character. And once that 1-minute change of character happens, then also we can see this swing low is strongly broken down, which is a 1-minute break of structure down. So what this shows us is the 1-minute uptrend has now changed into a 1-minute downtrend, which is top-down analysis, which means now we could take a potential sell entry. So now you can see a swing low has been formed and we can see a push down with break of structure. This is where now we think of taking our optimal trade entry. So we draw the fib tool from this swing high into this swing low, and we are expecting the price to retrace into fib 62% for us to take a trade. So you can see the price retraced all the way up to passing fib 79%. We have not yet taken the sell entry because we need the price to tell us that it's willing to go down during this retracement. So now we can see when the price reached this area, it has made wicks, which means it's potentially showing the price is not willing to go up with the wicks. So now we can see the price is showing us signs of going down because it has formed a swing high, and you can see this bearish candle. So with this confirmation, this is where we will place our optimal trade entry. We place a sell stop order. If the price comes passing this 62% down, it will trigger our sell stop. In this candle, the price immediately went down and triggered our sell stop. Now we are in a sell entry. And you can see the price strongly went down, and we can take our partial profits over here, but we let the trade run further down, and we will be taking our next take profit, partial profit over here for a 1 to 2, and then we will let the trade keep running. So you can see it hit our second partial profit, and then it started to retrace all the way up. So now you can see if we had our trade still running, some part of the trade, you can see the price almost came and stop loss us, but still it did not hit our stop loss. So our trade is still in play. However, we have already taken profits when we took partial profits over here as well. So now we are continuously monitoring the market and the trade. So this is at 9:30 New York time. When the stock market opens, you can see there was some volatility over here. After 9:30, the price is in this area. So the price is choppy in this area. It's forming a range. So that means smart money is possibly building up orders. So with the high level trade analysis we are looking into bearishness, short setups. We already took one, which is already in profit. However, we can see over here, when at 9:30, possibly the algorithm is giving us a second opportunity for us to take a second potential trade. But since the price has come all the way up to this, if we are taking a second trade entry, we will not use this fib. So I will take them away from the chart, and we will draw the fib tool from this swing high to this swing low, because this was when the price was going up, and this is where the price turned. The uptrend was turned into the downtrend with the market structure shift, change of character, break of structures. So since the price at 9:30 came all the way back, we are using this fib point from this point to this point, and not the other fib, which if I put it back, because in this fib which we draw earlier, the price has already now gone above 79% and price is in this area. So we want further buffer if we are taking another trade. That is why we will be drawing the fib from this point to this point. So I will take this out and put the new fib from this point to this point. So now you can see when I draw the fib from this point to this point, we got some further buffer, and we can see now the price is in this area of fib 79%, and you can see it's in a range, which means it's possibly building up orders. Also you can see it's in this area where the price pushed down in 1 minute. So if you look over here, this 1 minute bearish order block, it's being respected in this area. The price is made in wicks in that area, and price is going down. So, and also this fib shows us the price is in the fib 62 to 79% area. So this gives a possible second optimal trade entry in this location. You can see that a bit clearly when you go to the 5-minute chart. That fib, you can see this price swing, the price was going up, and respecting the 15-minute order block, price is going down. So that is where we draw the swing, and we can see the price has pushed down. And if you look at the 5 minutes, it has made a break of structure in 5-minute chart as well, from here to here, which means now we have extra confluence in 5 minutes that the price is possibly pushing down, possibly where we could target the sell side liquidity below London low and Asian low and the previous day's low. So this is showing us with this price swing down in the 5 and 15 minutes and 5 minutes, and with all the price going up and showing us break of change of character, market structure shift, break of structures, and strong displacements, gives us extra confluence that we could take a potential sell entry over here, targeting the sell side liquidity made below London, Asian and previous day low. So now in the 1 minute chart, if you look at this candle, we can see it pushed up these two green candles and potentially grabbed some liquidity. So we are monitoring on that, and now we can see once it grabbed that liquidity, you can see the price strongly pushed down. So this is a potential liquidity sweep in 1 minute and price displacing down, which gives us confluence that we could enter into a sell entry, optimal trade entry. So this is where we place our second optimal trade entry at this fib 62% level. And for us to place the stop loss and the take profits, we will look at the 5 minutes and the 15-minute charts. So I'm in the 5-minute chart where you can see the stop loss was placed above the 15-minute order block, giving buffer for the price to react to the 15-minute order block. And we are going to target the liquidity below London and Asian and the previous day's low. So our first partial take profit target is below London lows. Now the sell entry is being placed, and we will see what the price is doing. So we can see the price strongly pushed down, and we will take our first partial profits below the London lows, and we will let the trade keep running further down. And you can see the price has further pushed down below Asian lows, grabbing all the liquidity below this, and also the price went all the way down, grabbing liquidity of the previous day's low. So let's go into 15-minute chart. So this is the previous day low. So there's plenty of liquidity below that. So the price has gone and grabbed that liquidity. So that's what we were targeting earlier. So this is where we took our next partial profits. So by the time we took that partial profits, the trade is in 1 to 3.75 risk to reward ratio, the trade over here. So we take partial profits over here and we let the trade keep running further. So you can see the price was building a range over here, but in the New York PM session, the price further pushed down and grabbing further liquidity. And by the time you can see the trade is in a 1 to 10 risk to reward profit. So it's a profitable 1 to 10 risk to reward trade. So this is where we exit the trade in full for a remarkable 1 to 10 risk to reward based on the trading concepts which we teach you in this course. Okay, so it's end of the video and we will see you in another video.